Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I'm going to talk about the Dow Industrials, an update as to where we are with the price action, the Elliott Wave picture. Take a look at the CBOE Volatility Index, the VIX, the High Yield Bond Fund, the 10-year yield, and the dollar index. And then we're going to look at three major banks that are all reporting Friday morning before the market opens to kick off the earnings season. JPMorgan, Citigroup, and Wells Fargo. All right, let's start off here with the side-by-side view. The Dow was down 673 points this week. The S&P 500 down 51, and the NASDAQ 100 was down 142 points. So a little bit of a pullback. Nothing major at this point. The Dow Industrials was the biggest mover to the downside. And let's just go back and take a look, go to the home screen here, take a look at the side-by-side view. On Friday, let me move this over, down 187.38 at the close. Now, the interesting thing is a couple of things when you look at this daily chart. Okay, we had an potential island reversal pattern that showed up in here because of the price action that happened on Thursday. Now, on the S&P 500 and the NASDAQ, they moved up during the intraday on Friday and closed the gap. The Dow did not even come close to doing that. So it's going to be interesting to see if this continues to hold like this. And then this trend line I've got drawn in here, it comes from the October low through the March low. And you could see that here towards the end of May, beginning of June, 3 times we punched below it, but could not close. I think right here we closed pretty much right on the trend line, but not dramatically closing below that trend line. And now we're only a couple hundred points away from that trend line as we start the next week. Now, when I move into the Elliott Wave picture that I've got here, actually, I want this scenario. This is what I want right here. That other one wasn't updated. So this one is the picture we've got. We are looking, let me do the weekly. I'm going to talk about a slightly different trend line that I want to focus on. So there's 2 trend lines I'm watching. So right now I'm looking at this as intermediate wave 2 high. It has not changed in terms of the wave count I've got in here. And this intra-week high, which actually occurred on December 13th, has not been taken out yet. Now, it could be that this all of a sudden changes and we continue to push a little bit higher in here. But right now, this has had every opportunity to do that, and it hasn't pushed higher. So here's the other trend line I'm watching. This trend line is the part of the, is basically for the Y portion of this double zigzag. So it encompasses this zigzag, ABC, this trend line. It's a little bit further down, about 500 points, I believe, or so. But both of these trend lines, the one I talked about on the daily chart, the other, the basic one right here, and this one have got my attention. I think we closed substantially below this, and we are going to be underway in terms of major breakdown. So that's what's going on in here. Let me take a look at the 130-minute time frame, which moves cuts the day into 3 equal bars, 130 minutes each. So the gap was formed in here by the opening candle that happened on Thursday, 3 bars, and then here's Friday. Now the interesting thing too is look how negative the last third of the day closed. So, we push up middle of the day, couldn't go very far, and then we come down, we close not only below the trading of the prior 2 bars, but the way the Dow closed is it closed below the trading of like the last 6 days in here. You look at this. Let me go back to the daily and take a look at this. So we closed in here below 1, 2, 3, 4, 5, 6 trading days. So pretty negative push into the close on all the major indices actually, but today we're focusing on the Dow. Let's take a look at the VIX. And let me pull that up. I'm going to pause for a second. Okay, on the daily view, the VIX was actually down 61 cents on Friday, but for the 3rd day in a row, we closed above the 10-day moving average and we got a little moving average cross in here. Now, we've been faked out a couple of times before when we got some strong pushes. Couldn't really push on a closing basis substantially above the 20 level in here on the VIX. So we'll see if we can continue to get movement like that to the upside now. That'll be an indication that selling is underway. We'll see what happens. And when you look at the weekly view, we actually closed above the high of the last 2 weeks in here. So pretty good little pop the last 3 days of the week. We'll see what kind of continuation we get. Now I want to take a look at the high yield bond fund. We go back up into the macro area. Take a look at HYG. Now, this is screaming risk off. Okay. We had four days this week. Had to stop. I was spacing out there for a minute. I was like, wait a minute, did we have Monday off? No. Monday was a half day, remember? We had Tuesday was closed. And so here's the half day Monday, here's Wednesday, Thursday, Friday. Look at the big break, breaking the trend line in here. And then we snap back to it on Friday and then come right on back down with the move that happened in all the indices in the afternoon. To me, this is saying risk off. Now, it's going to be a stronger risk off when we take out this low right here. But here's the other thing, and I think I've talked about this before. When you look at the weekly view, this has not confirmed. Look at this August high. This has not confirmed anything that the major indices have done since the first of the year. Here's January. Okay, so this is just basically saying, no, something's a little wrong with the picture here. Okay, let's take a look at the 10-year yield. And here's the picture on the daily view. We got the explosion that occurred on Wednesday, Thursday, Friday, and we closed at 4.05%. That's how you read this. Up about 1 basis point. Didn't move very much, but for the week, up 23 basis points. Pretty substantial break. We are not very far away from attacking that 4.33 high that occurred the week of October 16th. And I'm looking down. Seems like I had some notes. I forgot to mention too on, let me just stick with this. So this is the highest close since the week of October 30th. So when you look at this on the close on the weekly, let me just bring it over a little more. Let me zoom in. You could see if I draw a line across where we closed, that's the highest close since this bar right here, which is the week of October 30th. Okay, so yeah, we had a pretty strong push this last week. And, back I was going to mention on the high yield bond fund, HYG, this was the lowest close, the lowest weekly close since the week of March 19th. So again, pretty substantial little move is going on in here. So let me go back to that 10-year yield, because at this point is where I wanted to mention, since we're talking about the 10-year yield, let me show you this tweet I came across from Ian. This chart shows this Chairman Powell's preferred U.S. yield curve, 10-year minus 3 month, okay? He's talking about the fact that in terms of the degree of inversion, there have only been 3 times in history that have had an inversion of this magnitude or greater, and that was 1929, 1973, and 1979 and 1980. So not a pretty picture, and as he says in here, all 3 of those did not have great outcomes. Of course, 29 was the worst, 73 was probably the next worst, and then there was a pretty severe little recession going on in 80 to 81 into 82, I believe. And then 82 is when we had the big blast off. So that's the picture there. Found that really, really interesting. We haven't seen this, only 3 other times have we seen this kind of inversion on the 10 versus 3 month interest rate. Let's take a look at the dollar index. I've got that in here, right here. Okay, big move down on Friday, down 0.894 at the close. On the weekly view, down 0.64. Now the wave count that I'm looking at the blue analysis. Here's the daily, weekly. I think there's a decent chance that this B wave has ended. And I'm looking at this because I think this B wave is a triangle. Okay, here's what I've got. A, B, C. And I'll feel better about this E wave finishing when we get down and take out this D wave low right here, okay, which is 101.92. But it sure looks like we're just not very far away from doing that. The low on Friday was 102.226. So what does that mean? That means we have another leg south is underway. And this should be a 5-wave move, can be either impulsive or an ending diagonal type pattern in here as a part of a zigzag. And yes, it can extend. I mean, it can be a lot bigger than this. It can be equal to A, and it can be longer than A. So that is what's going on with the dollar index right now. We'll see what happens with that. And then let's take a look at the three big stocks. Let's start off with JPMorgan. Okay, here's the wave count I've got on JPMorgan. I'm labeling it as A, B. It could be 1, 2, but on JPMorgan and in all three of these, I decided to just label it as a zigzag, a large zigzag move down because, 5-wave, 3-wave, and then we're going to get a 5-wave. And if it was an impulsive wave, 1, 2 would be the same type of count in here. Interesting thing on the weekly view, look how the volume is dropping off in here on this last push in this last leg. And then when we take a look at the daily, here's how I'm looking at that last C wave right here. Okay, I think that we've got 5 waves going, and that 5th wave looks like an ending diagonal pattern that we overshot here on the 5th wave. Okay, a little bit of a throwover that occurred. So if that's the case, this should continue to come down and then take out, break. Let me just draw a trend line in here. It should take out this trend line fairly easily. We'll see how soon that happens. But that's what I'll be watching here on JPMorgan. All right, let's take a look at Citigroup. Actually, I didn't do an ABC here on Citigroup because I'm just looking at the 5 waves down, the first 5 waves, and I'm coming off this high right here, which is May of 21. Okay, so since from that high, now that wasn't as high as this one right here, but I decided to just come on down with 5 waves because it looked pretty clear to me. And what's really clear is this triangle. This is a running triangle in terms of what's going on, what we label running triangle because of the way B acted versus A. And right now, what's interesting, what's extending out over here is the E wave. And I think the E wave is morphing into a triangle itself, and it'll do that sometimes. The key on triangles is that 4 out of the 5 waves need to be zigzags, okay? But the E wave can move into being a triangle itself. So that's the way I'm leaning right now. And when I look into the daily view, here's what's going on with that E wave. Now, if this is the case, and this is the end of the D wave within the E wave, we should be pushing up a little bit higher to finish off this E, okay? So that's what I'm looking at, but it shouldn't go above the C wave, which, okay, so what's the high right here? 48, 49, 42. 49, 42. And where did we close? 45.77. So as a result of the earnings, we'll see if we get some kind of bounce for a few days. And actually, this may happen before the earnings. And then the earnings come out on Friday, and then it goes through the floor. We'll see. Okay, so that's where we're sitting because we still got 4 days of trading before the earnings come out on Friday morning. Let's take a look at Wells Fargo. Okay, with Wells Fargo, simple zigzag is the way I've got this labeled. And within this B wave, it looked like a complex double zigzag in here, WXY. And now we've moved down with a minor wave 1, minor wave 2, nice sharp move to the upside. And again, look at how it looks like the volume has just been dropping off with this whole push back up here to minor 2. So watching for this to break down and start taking out, multi-week lows in here, and this will be rolling over. But right now it hasn't done it yet. It's the same thing on all of these. You got to watch the price action for breaking of trend line, breaking of the lows. Okay, that is the picture for this weekend. We'll see what we get this coming week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.